Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Kadena. So, we're 5 cents away from making new bear market lows for Kadena. On the weekly time frame, we've got some new data points that I want to discuss in this video. And as we're dumping, our trade is in over 125% profit. Let's update the trade, let's update the market. So, diving right into things, as I just posted over on my YouTube channel, Bitcoin has just signaled that we are having a breakdown from a diamond top reversal pattern, and altcoins are showing major weakness, with Kadena absolutely melting down about -3% on the daily time frame. Of course, not so much of a major move yet, but we're very close to breaking down into new bear market lows, only 6% away, or 5.5 cent. KDA BTC today has just broken down into new bear market lows, and in terms of how far away are we from the next major line to the downside of support for KDA BTC, it's about another 29% drop. So expect Kadena to keep on underperforming its Bitcoin pair as the altcoins show weakness against Bitcoin. In terms of the new data points that we've got from Kadena, we've been, of course, discussing in the higher time frames how Kadena is breaking down from this massive head and shoulders with a price target down at 55 cent. And there's, of course, volume profiles down at 50 cent, which we have been discussing on the channel. But what are these new data points, and could this let us know that we're coming down to 50 cent very soon? Well, let's talk about it. Now, if you remember, we posted a video on Kadena yesterday talking about its next move. We were waiting for the stochastic RSI to update. This is, of course, a weekly chart. Every Monday, we get a new data point on the stochastic RSI, and we were talking about how, a bounce is going to be coming probably in the next month or so, but it really depends on when the stochastic RSI actually bottoms round about the 0 point, because typically what happens in the stock is you can see a bottom happens round about 0, a bottom happens round about 0, bottom happens round about 0, and it takes a few more weeks of breaking down to the downside while the stochastic RSI finds a bottom before we have these bounces that happen in the market. So you can see, it takes a very long time to round out a bottom on the stock, and once it finally rounds out a bottom for a prolonged period of time, that is normally when we get a bounce over on the stock. Now, what I wanted to update is we're not even at that point yet for the stochastic RSI, where both of the oscillators are down at 0. What I wanted to highlight in this video is, as you can see, the blue moving average, the short-term moving average, is hovering just above 0, round about 1, but the longer-term moving average is still round about 11. So what I've done is I've put a horizontal line through the long-term moving average, and I'm going to look at data points where the long-term moving average for Kadena has previously been at this exact level. Now, what you can see is back when the bull run was topping out for Kadena, when we topped out around about $29, we did have a data point right here where the blue moving average bottomed out, but the orange moving average continued to, chop sideways for a little bit. And this did actually equate to about a 56% bounce. Now, do bear in mind, liquidity conditions were much stronger back in this period in time. There was far more liquidity able to drive up price 55% as compared to now. As you can see, liquidity is pretty beaten down right now. We may not have a linear downtrend, but you can see, drawing a line of best fit through these data points, liquidity, money flow index is generally down right now for all of the markets, including Kadena. And as you can see right now, we are showing major weakness on the MFI. Nonetheless, we did have a small bounce when the stochastic RSI was bottoming out, but from this data point, within 1, 2, 3 weeks, we signaled another reversal down about 60% after that dead cat bounce. Over here, you can see the moving averages were coming close to a bottom, although it did take a prolonged period in time, and we did equate to another 51, 52% drop before we actually did have that bounce coming for Kadena. Over here, you can see the blue moving average pretty much found a bottom around about 1. It was actually trading around about 6, but the long-term moving average was catching up very quickly to the short-term moving average because we were trading very sideways for a long period in time. This is why they were much tighter and closer to each other over here, and they ended up bottoming pretty much at the same point as compared to now, where we're dropping a little bit faster than this consolidation. nonetheless, going off on a tangent, when the stochastic RSI, the long-term moving average, was round about the same point that we were at now, we had another 1, 2, 3, 4, 5 weeks and another 43% drop to the downside before we did see a bottom in Kadena. So what does this mean? You know, for most of these data points, one of them had a dead cat bounce, but do bear in mind liquidity was much stronger back here. We looked at that in the form of the MFI. Also, you can look at other different things such as the OBV. You can see on balance volume is clearly having a downtrend at this moment in time. So in my opinion, liquidity conditions aren't really supportive of this same, dead cat bounce that we had back in here. And in general, looking at most of these data points on average, if we add up all of these data points and divide it by 3, you can see the drop on average is round about 58 or 60% to the downside. So what could this potentially mean for Kadena at this moment in time? Well, let's say we have a 58% drop. That would actually take us down to 35 cents. Now, on one of the major volume charts that we look at, we do actually have a huge cluster of liquidity down here. Now, I also do want to put things into context, just like when liquidity conditions, if I can find the chart, when we were talking about the MFI, the OBV back here, we clearly had much more liquidity to dump in the markets, which is why, back when liquidity was a little bit more plentiful round about here, there was more options to dump in the market. However, right now, I don't think that we're going to be having a 58% drop. This is just a data point to point out for yourselves. What I do think is going to be happening is I do think Kadena, especially looking at the stochastic RSI, we have plenty of room to keep on breaking down for the next few weeks. So let's instead not look at the percentage moves. Let's just look at how long we could potentially move down for. Over here, we were at the same place for the stock, same place for the stock, same place for the stock, same place for the stock. It took 42 days for us to find a local bottom. Over here, it took 56 days for us to find a local bottom. Over here, it took another 42 days to find a local bottom. So potentially, you could see Kadena breaking down into around about late June. I do think that we've at least got another month worth of capitulation, and at which point I think we're going to have a major breakdown. I think the altcoins are going to get beaten down for the next month or so, and then at which point, when I start to see this consolidation in the stock and a turn up, I will be calling for a dead cat bounce. We will make sure that we're out of all of our short positions at that moment in time. We'll be waiting for a reversion back up to the mean. Potentially, this could correlate with another short position coming into something like the bull market support bands, the EMA ribbons, but really, this is the new data point we've got. The stochastic RSI is telling us we're not yet ready to bottom out and have that dead cat bounce we've been talking about. It's instead letting us know that we're probably going to continue breaking down for another 42 days or so, considering we've got a lot of bearish patterns lining up. As you remember, we entered a trade roundabout here when we were reverting into the EMA ribbons, the bull market support bands, and we've got a lot of technicals right now letting us know we could be heading down to 54 cent. We've got volume profiles showing support roundabout 69 cent, 50 cent down here. So in general, I think KDA is coming down to this 50 cent region very quickly. And if we come over to the daily time frame, the last data point that I want to show you is this right here. Now, we talked about this in the last video. This support box is your absolute last line in the sand. As you can see, if we pull this back, we don't have any further support unless you're looking at a very quick wick down here at 82 cent, which we've already blasted through. So, this is really it in my opinion. We've pretty much confirmed, well, obviously we haven't made new lows yet. We're about 4 or 5 cent away as of the time of recording. As you can see, very close. As we've been saying on the channel, KDA BTC is a leading indicator of what could soon happen for KDA USD, and we've been seeing this make new bear market lows since round about the 8th of March. This has just been making almost new bear market lows every single day, if not every other day. It has been pretty ugly, and we've been saying this is going to be a leading indicator. We're going to make new bear market lows on KDA USD soon, and you can see KDA BTC was breaking down around about the 8th of March, and it took KDA USD a whole month later, around about the 19th of April, to really start following the trajectory of KDA BTC. But with that being said, my friends, we've got tons of bearish technicals right now. A lot of the oscillators are telling us we've got more room to break down. We're losing these final lines of support. So in my opinion, KDA is coming down to 50 cent in the next month. Now, What does this mean for the next few weeks? Well, personally, I'm actually not going to be targeting all the way down to 50 cent. I still have my take profit round about 69 cent. And this is because, in my opinion, round about this 69 cent is a big cluster of liquidity, a cluster of liquidity in which we have really not seen the size of in absolutely ages. In fact, the last time we were in, this dense of a cluster of liquidity was actually back here in March of 2021. This is the biggest support region that we found in the past 784 days. So would I be shorting past this point of major support? No. Do I still think that it's possible and very likely that we drop down to 50 cent? Yeah, it's very, very likely, but as we've been talking about on the channel, I'm a very conservative trader. We shorted this reversion to the mean on the EMA ribbons on the weekly time frame absolutely beautifully on this data point right here on our 5x leverage trade. This would be a 40% drop or a 3x return, meaning if you put $1,000 into this trade, you would be walking away with $3,000 after we come down and hit the take profit. So we're very, very close, ladies and gentlemen. From our entry, the markets are down 25%. Meaning that, of course, we're sitting in 125% profit, maybe 120% after fees. We've obviously realized a lot of profit, moving our stop loss down to 96.8 cent. So really, that's currently what I'm seeing for the trade. I think we're going to get further continuation. I don't think I'm going to be moving my stop loss right now because, the markets are very knee-jerky. We could come back up and, retest something like the top of this box around about 87. We could retest the short-term moving average. We could retest the long-term moving average. These are all possibilities, and I don't think that we're going to have a major bounce up to the invalidation point of this trade. I really think we're going to get further continuation down. But what I will be saying is, if in the next few days we do flip this 84-85 cent region as resistance and we start to break down further from there, what I'll be doing is I'll be moving my stop loss further down, further into profit. For right now, I'm sitting on my hands watching the analysis come into fruition. Once again, the take profit is still the exact same at 69 cent. If you do want to target lower price targets like the bear flag we've been talking about at 58 cent, if you want to target the head and shoulders price target at 55 cent, if you want to target the next volume profile down at 50 cent, this is not my personal plan. This is not my personal TA. What I would recommend is, if you are doing this, make sure you're moving your stop loss very, very far down and you're realizing lots of profit, because this volume profile, it is very, very possible we break down, we come down to this 69 cent, we get a major bounce, and if you are in a very tight position, you may get wiped out before coming back down and hitting 50 cents. Something like this is very, very likely in my opinion. But with that being said, we'll be taking profit at 69 cent. Congratulations to all the cowboys who are in major profit. If you're sitting in profit right now, let me know in the comment section down below. But for today, my friends, that's all I've got. If you do enjoy my content, as always, let me know down below by leaving a like and a comment. Share the videos with your friends. We're so close to 10,000 subscribers, so just a major shout out to everyone who's been with me on this journey so far. If you want to further support the channel, click the join button and become a member today. Follow me over on Twitter at 618_cowboy. That's all I've got for now. It's been your boy Cowboy Trades. I'm out. Peace.